Assalamu alaikum. Welcome to lecture 8 of tax. So in this lecture we are going to cover the trading losses. This is the continuation of lecture 6. So lecture 6, lecture 7 and lecture 8. All these three lectures are focusing on the unincorporated traders. That is the self-employed. So now the trading loss. We have to calculate the tax adjusted losses, then identification of loss with the tax year, then the established business. What are the options for loss relief? If you are a established business means you are there in that business for many years. Then set off against total income, carry forward against future trading profit, set off against chargeable gains, then commencement of trade. When you start trading, what are the options of loss relief? Set off the total income of the previous tax years. Then when you're ceasing trading, what are the options? The terminal loss relief. Then loss relief planning, objective, the choices of loss relief, and finally, which syllabus area did we cover? Summarize the entire lecture and the technical articles. Now, so this is the graphical representation. Okay, trading losses for your established business, for when you start trading and when you cease trading. So overall, the objective of this lecture is to explain you the concept of trading loss that arises in a sole trader. First, the tax adjusted losses. So trading loss arises when the tax adjustments to your profit and loss figure is going to give you a negative amount. Then it is known as adjusted trading loss. Why? Because you have adjusted it for tax purpose. And the same way how you adjust the accounting profit to get your trading profit for tax purpose. So since capital allowance, by the way, capital allowance was the topic for my previous lecture, lecture 7. I have covered the entire capital allowance. Okay, how it is calculated, with the different types of allowances, when it is eligible, when it is not eligible, everything has been covered. So make sure that you watch my previous lecture, lecture 7, to know capital allowance in detail. Okay, so the capital allowances are your trading expense. Because they are your trading expense, they form part of your loss. And your balancing charges. So what is this balancing charges and all? I've covered in the previous lecture. So make sure that you watch my previous lecture to understand. I'm not going to explain balancing charges once again here. I'm assuming you know balancing charges, and if you haven't watched my previous lecture, do go back and watch because it's very much important for this lecture. So balancing charges are your trading receipt. Now capital allowances. Remember, capital allowance can increase your loss, trading loss. It can even turn your trading profit into trading loss. So automatic inclusion, automatically if you have included the capital allowance in the losses, okay, so the automatic inclusion of capital allowances in the loss can be avoided. How? Don't claim the capital allowance. Don't claim at all or part of the capital allowance. By not claiming it, you can prevent the loss from taking place. Another advantage, this can help you to preserve your personal allowance, because if you deduct your capital allowance from your trading profit, the profit will be, maybe it's negative. So if it's a negative, you can't claim your personal allowance there. You should have a positive this thing. Now, identification or loss with the tax year. You have to identify it with the tax year, same way how you identify the trading profit with the tax year. So this is very much like your profit, just now it is a loss. The process is all same. So accounts could be prepared for 5th April or 31st March. In this case, it is very straightforward. If it's prepared for 5th April, it is for the loss ended 5th April 2025 or 31st March. It goes in the relevant tax year. You don't have to adjust anything. The tax year is 2024-25. But if your accounts are not prepared to 5th April or 31st March, then some or even all of your trading loss must be utilized against the time apportion profit. Then you have to apportion your profit. We'll definitely do questions on both of this, when we are having the year end as 5th April or 31st March and versus not having the year end as 5th April or 31st March. Now, so where there's a loss, in your trading income you have to show 0. See example 1 for it. So example 1, this is about Mr. T who have started trading on 1st April 2023. So he's preparing the account for 31st March 2024 and 31st March 2025. Now the losses are 22 and 13. So 22 and 30. Because the losses, the assessment will be nil, nothing to be taxed. Now, example 2, overall loss. So Sabrina is having a trading loss of 40 for 2024, but 2025 it is 35,000. But remember, it is 30th September. Year end is different now. So when you are taking for the tax year, remember from 6th April to 30th September, one tax year, from 1st October to 5th April, another tax year. So 6 months. So 40,000. When you are taking the trading loss, you are only taking 6 months of 40,000. And when you are taking the profit, also 6 months. And when you aggregate them, there is an overall loss. What did you do here? You have time apportion. This is what you have to do when you're not having the year end as 5th April or 31st March. You are having 30th September. That's why we had to apportion. In example 1, if you see, you did not have to apportion anything because the year end was 31st March. Now, moving to example 3, where you are having an overall profit. Here also, you have to time apportion because the year end is June. So you are having a trading loss of 28 June and profit 18,000. So this 28 for 3 months, from 6th April to 30th June, and from 1st July to 5th April. 9 months, 18,000 profit. So overall you are having a trading profit. This is very easy. Now we are moving on to the second part. Options for the loss relief. Remember, for your exam, this area is 101% going to come. They definitely, always, in every sitting, they will test the loss relief. So there are various options. You have to know all the options because in your exam, you don't know which option might come. Sometimes they tell you specifically which one to go for. Sometimes the question leaves it to you. You have to calculate under variable options and see which one is the most tax efficient. So now, how many reliefs are there? There are 3 reliefs. You have to know all these 3 reliefs. Whether you use accrual basis, whether you use cash basis, this relief is there for both. So now, first relief, you are setting your loss, trading loss against your total income. Remember, total income is not only trading income. It includes your other income also, either in the same tax year or in the previous tax year. See, and or. Why? This and this both, or this, one of them. That's why and or. Second, you can carry it forward against your future profit from the same business. Remember, when you are carrying it forward, it is not your total income. Then it is only your trading income because future profit means from the same trade. Third, set off against chargeable gain. So remember these 3 options. These are the same things that we are going to study in ATX as well, but with more detail, of course. Now, for using this method, there is a pro forma. Make sure that you know this pro forma very well because loss relief otherwise are difficult to handle because you will be having multiple years. You don't know which year loss is relieving and you don't know the accumulated balance. So very important, you follow a pro forma. So you start with trading income, deduct the brought forward loss relief and add. Remember, this brought forward loss relief. First deduct from trading income, then add other income. Okay, do not add other income with trading income and then deduct. No, first from trading income, then get other income. That's your total income. Then deduct qualifying loan interest paid. This part we have covered in the previous lecture. Then we deduct the total income loss relief. There is a limit for this. We have covered this also in my previous lecture. Now you get your net income. So from your net income, deduct personal allowance. Rest all you know, taxable income and then on that tax. Now, pro forma for capital gain tax computation. We haven't touched capital gain tax yet. But let me tell you, capital gain tax is not on your income. If you are selling anything which is capital in nature, capital goods if you are selling, and if you are incurring any profit on that, it is known as capital gain. So on that capital gain, we don't pay income tax, we pay capital gain tax, which is known as your CGT. That itself is a big lecture. Okay, we have 5-6 lectures on just capital gain tax. Same way how we are having for income tax. So if it's capital gain tax, okay, now your chargeable gain. See, in your income tax, it is known as taxable income. The only thing is the word is changed. When you go to capital gain tax, the word becomes chargeable gain. Okay, then you deduct your capital loss. Here you deduct what? Trading loss. From chargeable gain, you deduct capital loss, and you get your trading loss. Then you deduct your trading loss relief. Capital loss has to be deducted from chargeable gain first. If you're having any capital loss, and definitely they will give you capital loss, then you deduct your trading loss relief and annual exempt amount. How for income tax we have personal allowance PA. For capital gain tax we have annual exempt amount and it's fixed. But for right now you don't have to know this amount, because this amount you will anyway know when we go through capital gain tax. Then unrelieved capital losses brought forward. If you have any capital losses that is not relieved, brought forward, now you deduct. After deducting annual exempt amount, then you get your taxable amount for capital gain tax. Remember, capital gain tax is charged on this. The rates are different. We haven't touched that yet. It's not your income tax rates, the non-savings rate 20, 40, 45%, no dividend, no. This is different. So now, setting off against total incomes. This is first where we are setting out against total income. So this means your trading loss. You can set up against total income in the same year, either in the same tax year or in the previous tax year. And if the qualifying loan interest has been paid, this is about qualifying loan interest. Relief against total income less qualifying loan interest for the. Remember that relief will be total income minus qualifying loan interest. Against this, first from your total income you have to deduct your qualifying loan interest. Then against that you are going to get the relief. Okay, now in any order you can get the relief. It's your wish. So example 4. Arthur is having a trading loss. Year ended is this. You don't have to apportion anything. Now this trading loss can be set off against his total income the tax years 24-25 or 23-24 in this current tax year or in the previous tax year. This is current, this is previous. Okay, now example 5. So here he is having a trading loss 18,000 31st March 2025. That's why for adjusted trading profit this is showing you nil. Why? Because he is having a trading loss. Rest everything is there. Now what are the options? So first we'll go through the options. Always assume we are setting off against the current year. So if we are setting off against the current year, that means we only have 6,000 total income. So set off against 6,000. If this 18,000 loss you are setting off against 6,000, you are left with 12,000 remaining loss. This 12,000 loss you can take back in the previous year and set off against 23-24, 16,000. So from the 16,000 you can set off 23-24. Next option. One way is that next option, set off against this 6,000 current year and carry forward. Do not take it back, rather you carry it forward to the next tax year. So the remaining 12,000 loss you can carry forward. Third option, first set off against the 16,000, go back, and then the remaining 2,000, because 18,000 overall loss, no, the remaining 2,000 set off against 24-25. Or the fourth option, set off 16,000 in the previous tax year, do not claim anything in the current tax year. The remaining loss of 2,000 you carry it forward. You see how many options? These are the 4 varieties. So now, second, restriction of set off against total income. Yes, it is true you can deduct against total income, but there's a restriction. You have to know what is this restriction. We have covered this before, but now you will understand this even better with numbers. The maximum you can deduct cannot exceed the higher of 50,000 and 25% of your total income. Remember, this total income is after taking pension contributions but before your charitable donation. So in the tax year preceding that of the trading loss, no restriction applies to the sale against the profits of the same trade. However, 25%, 50% cap still apply in the sale of loss against other income. See, if you are setting off against the same trade in the previous year, you are making the loss in 2024-25. So it's 23-24, the previous tax year, no restriction if it's the same trade. If you're setting off the loss against the same profit of the same trade, but this 25% and 50,000 restriction comes when you are setting off against other income in the previous year or in the current year. So for same trade, no issue because they are total income, right? This total income includes other income also. That's why. If it's only from your trade, no restriction. Then it's not 25% of the trading profit. No. If that trading profit includes other income, that's how you get total income. Then you have to take 25% of the total income. So example 6. With this example 6, you can understand the restriction better. He's having a trading loss of 190. Okay. So these profits are given separately. This is nil. Now, so when he is setting off against the total income, the maximum loss relief against total income claim available are, see, this is other income. You have to take 25% of this. If you take 25% of 240, how much is this? It is 60,000, right? 60,000 and higher of 50 and 60. So 60,000 is higher. So the maximum loss relief against total income is 60,000 in this tax year 24-25. Okay, so 24-25 it is 60,000, and in 23-24, remember you have to add this to and then take 25% total income. So add this 25, which is 55,000, and 50. So higher is 55,000. When we are taking 25%, 25. So with this, so now with this 55, you have to add 40,000. Why? This trading profit. Here also you have to add 40,000 with 180 and then take 25%. Here, this 40 separately you have to add with 55,000. So total 95,000. So in the previous year, maximum is 95,000 and this year it is 60,000. Second, it is based on the first. Now second option. So other can choose to claim either in both years or in either order, in any order. First previous, then current, or first current, then previous. Or neither at all and carry the entire thing forward. That also he can do. If other claimed in both the years, imagine if he claimed both the years. What is the total loss? 190. How much is he claiming? 60 and 95. He is still left with some. So from 190, deduct 60 and 95. He's still left with 35. So this 35,000, this 35,000 carried forward. Now, when we are setting against total income, you have to consider personal allowance. So because this relief is against total income, that means some of your personal allowance, it means it can be wasted. Remember, losses you can carry forward, but unused personal allowance, you cannot carry it forward. And in this case, if you deduct, two things will be wasted. Savings income nil rate band, dividend income nil rate band. This also could be wasted if you are claiming, if the claim is made to use the loss against the total income. So you have to ensure ways in which your personal allowances and the nil rate bands are not wasted. So this could be one way. don't claim loss relief in either or both the tax years, or to make a reduced capital allowance claim. If the loss includes capital allowance, reduce your capital allowance. Now, loss claim. When should you make this loss claim? 31st Jan following the first anniversary of the tax year. First anniversary of the tax year is 30 Jan. It is 2026. Okay, because 25 is the end. So if you take first anniversary from the tax year of loss, it is 2027. So 31st Jan 2027. By this date, you have to make the claim. So the tax relief arising from a claim to settle against total income is given by adjusting the tax liability for the tax year of the loss, even if the loss relief strictly relates to the preceding year. So some exam advice. This 50,000 and 25% caps to income tax relief applies in a number of areas, this restriction. But for your exam, it is only they are only going to ask you this in terms of trading loss relief against total income. One area only they will test you. Thank God. Now, carry forward against future trading profit. Total income is over. So this relief, the remaining ones which you couldn't relieve, the unrelieved are now being carried forward and set up against your first future trading profit of the same trade. Here, in this case, when you're carrying it forward, you can't restrict to preserve your trading income, okay? So you can't preserve it for your qualifying interest paid and personal allowance. Here you can do that planning, but in the current and the previous year, you could do that. So if you do carry it forward, you might waste some of your qualifying interest paid or personal allowance. And remember, any unrelieved losses, whether you claim or not, it is automatic. Automatically, it will be carried forward. And the taxpayer must agree the amount of loss to carry forward with HMC within 4 years following the end of the tax year of the loss. So 5 April 2029 for 24-25 loss. Now, activity 1. So activity 1, if you see 4 years, they have given you the adjusted trading results, okay, from 2022 to 2025. Because the year end is 31st March, no issue, no need to apportion anything, and you have made a loss in 2023. Her other taxable income is 13,500 per year, that means every year. So you have to show, assuming no claim is made against total income, taxable income for all the tax years, and part B, full loss claims are made against total income to obtain relief as early as possible. See, the minute they tell you this, try to get it in the current and the previous year rather than carrying it forward. This is the meaning of it. And ignore any NIC. So now let us start activity 1. So whenever you are given a question on loss relief, remember you have to draw up columns for the different tax years. That is the thing that you have to do. Now, how many tax years are there? 4 tax years. Okay. And one, of course, you'll be keeping for the description where you have to write. And very important, you need to understand in which tax year the loss arose. See, this happened 31st March 2023. Okay. 31st March 2023 is the year of the loss. So that it happened in 22-23. This is the tax year of loss. So in this year, your trading income will show nil. Okay. Now, remember in A, no claim was made. So let us start doing with A. So this table I've used for capital allowances in my previous lecture. I still have it here. So in this only I will change the figure for the tax year. Starting with 2021-22. 21, 22, 22, 23, and 2023, 24, 2024, 25, the 4 tax years. Now, so first is your trading income. This is under A we are doing, where we are not claiming anything. Okay, so trading income, if you see, first is profit 19,000, then it's nil, 14 and 16, 19 nil. So 19,000, here you will show 0, don't write nil, show 0, otherwise it will take it as a text. 14,000, and what you have to write somewhere as a note that you have made the loss in the tax year 22, 23, therefore the trading income will be nil for that tax year. That you have to write somewhere. Now, so here, no claim. So you are not making any claim against total income either in this year or the previous year. What is the option? Carry it forward. So now we are going to carry it forward. So now when we carry it forward, remember this is the tax year of loss. I'm going to, okay, so now you know that this is the tax year of the loss. When you carry it forward against trading income, you have to take it. So here, carry forward relief. So now against 14,000 and 16,000. Done. So now I'm going to do the sum function and copy it to the other cell. Done. So now I will add my other income. This is according to the pro forma that I'm doing. Okay. Other income, they have told 13,500 per year. 13,500. Copy to the other cell. Done. Now I'm going to get my total income. So total income is here, this plus other income. Done. Now from your total income, what do you deduct? Personal allowance. Personal allowance. Remember your total income in all this case is less than 100. So minus 12,570. You will get the full personal allowance and then you get your taxable income. So sum function once again. Then I'm going to drag it to the other side. Done. Remember you have to stop here. You're not supposed to calculate tax. They didn't say. You only have to calculate your taxable income. So now this is your taxable income. Always keep a memo with you. Okay, the loss memo. So you know how much of your loss is still remaining. Sometimes they ask you, sometimes they don't. But it's always good to keep a loss memo or a memorandum. Memo is the short form of memorandum. So now loss. What is that? 46,200 is your total loss. Minus 40. All right, always write minus. Then how much did you get it relieved? Through carry forward. Always write the name of the relief. Okay. Is it carry forward, carry back, terminal relief, what relief? And the tax years. Okay. So carry forward 2023, 24. against trading profit. Wrap the tax. Done. Okay. So here it is 24.25. Same relief against trading profit. How much? 14,000. And in this case, 16,000. So now, unrelieved loss. Finally, which is remaining as unrelieved loss. Carry forward to the next, to 2025-26. Isn't it? Do the sum function and find out. Always use the formula as you're working. So 16,200 is still remaining. That was not relieved. Okay. Now, part B, where we are claiming. So what am I going to do? Just copy paste the entire thing. So this I'm going to copy paste here. Done. So this all will delete. Just delete. Done. So now this is with the relief. With claims to offset against what? Total income. And to get it raised, remember with total income they also told one thing, try not to carry it forward because they want to get the relief as soon as possible. Okay, so now here when we carry forward, okay, what is the relief? 16,500. But remember when we are carrying it forward there is a cap. So here this is part B. The total loss is 46,200. Your other income, everything else you don't have to change here. This is there. All you need to do is you have to change this spot. Rest everything remains the same. Automatically this will be adjusted because I have copy pasted it with the formula. So you don't have to individually do it again. Remember, when we are relieving against the total income, make sure that in the current year and the previous year, you are not wasting any of your personal allowance. So you have to get this full personal allowance. Okay? You have to utilize it in such a way. So here, So what is the total income? Is 32,500. So 50% the total income and 50,000, the higher of two. Of course, if you take 50% of this 32,500, higher will be 50,000. So higher of 50,000 and 25% of total income. That restriction will not apply here. That's a very big amount of profit. Why? Because here the total income is very less. Higher of 50,000 and 50% of this, right? Higher is 50,000 in that case, because if you take 50% of this, amount will be less than 50,000. So higher is 50,000, but you can't deduct 50,000 from here. Why? Because the amount is 32,500 is less, right? If you see the trading income, it is 19,000, it's very less. So you can't deduct 50,000 from there. So what do you have to do? You have to, that restriction will not apply. You have to deduct your entire total income, 32,500. So here I will just add one more line, insert after total income, relief against total income. It is minus 32,500. Done. So this minus this. If you do net income, another line you need here, net income. Here you are going to do sum function. This. So here when you do the sum function, it is your net income minus personal allowance. See, it is 0 minus this, right? It can't be negative. Your taxable income is nil, 0. Personal allowance is wasted. Coming here in the next year. So here also 13,500 is a total income. So here relief against total income 13,500. Done. In this case, if you do the sum function, just take it here. It's 0. Here it will be 0 because it can't be negative, because you have utilized the entire total income. Now you need the memorandum to see what is your tax. The same way how we have done here. From 46, what did we deduct? 32,500. And here 13,500. Still 200 is left. So that 200 you can carry it forward and get it ready. But now you have to change the description. Now it is relief against total income. So now it is relief against total income. Change the year 21, 22. No trading profit. And 22, 23. Done. Then carry forward relief. Carry forward relief. How much? 200. So you don't have anything relieved. Everything is solved. And this, when you are carrying it forward, mention the year 23, 24. Done. So now that 200, you are going to get it relieved against carry forward relief here. Here, just change the amount to 200. Done. Here it will be 0. Okay. So everything is done. Now, that's it. So what happened? If you see, without relief, you have to pay in all the 4 tax years. But with relief, you are only paying in 23-24 and 24-25 with no taxable income of the 2 tax years. So this is the answer for activity 1 under A, where you have made no claim. We have only carried forward 14 and 16 with still 16,200 remaining unrelieved. But in B, we have this and this against the total income and only 200 remaining, which is carried forward. So next, set off against chargeable gain. Now, even though individuals are assessed to tax on chargeable gain separately from their income, we'll see that in lecture 12. Okay. For the purpose of trading loss relief, it is possible to treat your trading. Okay, so it is possible for a trading loss to be relieved against your chargeable gains when an individual is unable to make full use of a loss against net income. Then this against their total income, which is their net income. Sometimes, most of the time, your total income will be equal to your net income. The only time your total income differs from your net income is when you are making a gift or donations or personal pension contribution. That's the only time when it differs. Otherwise, total income is equal to net income. So when you're unable to utilize your full loss against it, second option is treat it against the chargeable gain. So this arrangement applies in order to allow an unincorporated business to receive the same right to loss relief as a company. So unincorporated are treated as incorporated. Under corporation tax, this is the tax. Okay, so companies pay corporation tax. Companies on their profit pay corporation tax. We still haven't covered corporation tax and tax. That we will be doing it after we finish 2 more taxes, that is corporate capital gain tax and inheritance tax. So this we will see in chapter 16. So under corporation tax rules, income and chargeable gain of a company assessed together. See, under corporation, when we go to company, you don't have to know the detail now, just know briefly. For company's purpose, when they are being taxed, they are taking their income and chargeable gain together. They are adding them together. So because they are adding them together means they are getting their loss relief against chargeable gain as well. So to bring the sole trader in line with the company, to give them the same right as the company, now they are saying get it relief against chargeable gain. So automatically their trading loss is set up against other income. Now, so provided a claim against total income is made first, a trading loss can be set against the chargeable gain of the same or the preceding tax year. Same way how it was against total income. Same or the preceding tax year. Now, so the trading loss to be set off against the chargeable gain must be relieved after deducting current year capital loss. Remember, current year capital loss has to be deducted first before you deduct your unrelieved capital losses brought forward from earlier tax years and annual exempt amount from CGT. Okay, I've just shown you a pro forma where we are deducting it from chargeable gain. Same you have to follow. So the annual exempt amount in the CGT is equivalent to your income tax personal allowance. So currently your annual exempt amount for CGT purpose is 3,000. Okay. Now, so the amount of loss that can be set up against chargeable gain is the lower of your relevant amount, or the maximum amount. Lower amount means loss left after claim against total income, or current gain, deduct capital loss, current capital loss brought forward, whichever is the lower. So now, what is the time limit? The time limit for a claim against chargeable gain and the method for refunding the tax is the same as for claim against total income. Whatever we have studied for total income, time limit and the refunding, same for chargeable gain. Okay, I have mentioned it previously in the previous slide. Now, example 7 will help you to understand this. So now, you have been given a loss after against total income. Loss left after claim against total income is 5,000. Current gain 9,000. Capital loss 1,000. Now we'll see the lower. So what is the relevant amount? 5,000. Loss left after total income. Now, so from 9,000 we'll deduct 1,000. 8,000. Which is lower? 5,000 is lower. Hence we choose 5,000. So this is your loss relief. So now, from your 9,000 gain, deduct the loss 1,000 and deduct your loss relief. You are left with 3,000. Deduct annual exempt amount. Taxable amount is nil. Okay, so in this case, loss relief did not waste any of your annual exempt amount. Note number 1. Note number 2. If the loss relief was more than 5,000, some of your annual exempt amount would have been wasted. This is same like wasting personal allowance for income tax. Because same way how you can't carry forward personal allowance, annual exempt amount you can't carry it forward. So if you see you are wasting more of your annual exempt amount, it would be more tax effective to not claim the loss relief. Why? That means don't deduct the loss relief now. Why? Because you can carry it forward against future profit. You can still carry forward, keep on carrying forward the losses in the forward. But annual exempt amount, once lost, it's lost. Now, options for the loss relief when we are starting trading. So here, for the purpose of loss relief, a commencement of trade relates to the losses that is identified with the first 4 tax years of your business. So, where a loss rises for any of these years, taxpayer can claim relief. They can use any or all of the reliefs that I've already explained. What are the reliefs? What are the 3? Against total income, carry forward, against chargeable gain. Now, setting off against total income of the previous tax year. So here, this you can claim in addition to the other reliefs. So this relief allows the taxpayer to set up the loss the first 4 tax years of the trade or any of the next 3 tax years against their total income for the 3 consecutive tax years preceding tax year of loss in a FIFO basis. Remember, on a FIFO basis. And this relief will always provide the earliest relief, although not necessarily the most valuable relief. So whenever they ask for the earliest relief, go by the previous year. Then, a claim against total income of the previous tax year must be made for each tax year of loss. When? By 31st Jan following the first anniversary of the tax year of loss. Let's say for 2024-25 loss by 31st Jan 2027. Always 31st Jan, first anniversary of the tax year of the loss year. First anniversary means 12 months from that year. Now, activity 2. So we will be doing activity 2 to understand this, where we have the year end as 31st March, so no need to time apportion the profit, and loss we have in 2025. So 24-25. This is the tax year of loss. Okay. Now, before starting business, he was a salaried employment. So from his employment, 2021 and 2022 he is receiving salary 9,400, 13,660. Property income is also there, 1,700 each year for all the relevant tax years. Part A, trading income identify, and the tax loss for the tax years 22, 23 to 24, 25. Then calculate the net income 21, 22, 22, 23, assuming the earliest relief for the losses relief is claimed. So let us do this. So part A, we have to find the trading income. Let us do that. So if you see, I'm not writing it, but I will just show you. It is 6120 for 22, 23, 23, 24 it is 7630 and 24, 25 it is 0. The trading income. So those are the three things you have to show. Now we will directly go to part B to show the net income. So here we have 21, 22, 22, 23 and 22, 24. This year we don't need. So I'm going to delete it. This is from the previous activity. So when did you make the loss? 24, 25. So you will go back and carry it from the previous 3 years. So previous 3 years, okay. Now, in a FIFO basis, 21, 22 first, then 22, 23, then 23, 24. So now, trading income. Here trading income is nil because he started trading when? From 1st April 22. So 22, 23. 21, 22 he was a employee. That's why trading income is nil. Here 6, 120. And here it is 7, 630. Now, employment income. So now, then property income. See, we are setting up against total income. Okay, that's why we need all the types of income. So employment income is only for one. If you see, for 21, 22, you have been given for 20 and 21 also, which is 9,400. We don't need that. It is 13,660 because only the first 3 tax years you can get rid of. So 13,660. Thereafter it is 0 and 0 nil. Then property income 1,700 for all the 3 years annually. Then total income. Total income is your sum of all these 3 income. Done. Now I'm going to deduct against total income. Okay. So now relief. Relief against total income. So how much? 15,360. What is the amount of loss? 28,480. Now minus 9,520. Wait, there's a mistake. Okay, this is the mistake. It is 7,820. We don't have to find the taxable income. Okay. So now net income. So here the balance. Okay, that's why you have to do a loss memorandum. So I'm not going to write the description. You can do it by now. So on your loss memo, the loss is which year? 24, 25. How much? 28,480. 28,480. So I'm taking first this 15,360. Just change the description. It is claim against total income. Then 7,820. So I'm still left with 5,300. So it is 5,300 which you have to deduct here. Done. So this is the answer for activity 2. We have done A, where these are the profit, and since this is a loss, trading income is nil. So here we have done part B. We've got relief, did memo income. C, the loss was in 2024-25, right? So how is the tax relief given? This note you have to read. You adjusted the tax for 21, 22, 22, 23 and 23, 24. You're not going to go back and change anything because I've already paid the tax then. Okay. Rather, the relief of the loss will be affected by so you adjust the tax liability of the tax rate of the loss, that is 24, 25. You don't go, no changes are made to the tax originally paid for the earlier tax years. You don't go back and change. Retrospective change is not there. Whatever tax you have paid, you have paid. Rather, because you have made a loss relief and you went back and adjusted and got different net income, right? You might say now my tax should be different. I have to get a refund because earlier I paid more tax. No, that changes are not done. You don't go back and change the earlier one because you have already paid the tax back then. Rather, you adjust the tax now in the year of your loss. The tax rate of the loss, the tax liability is adjusted. This is how you get the tax relief for any loss. So now, moving on, when we are seizing the trade, part 4. So here, there is an additional option. And some options are removed when you are ceasing trading. So, same against total income and against chargeable gain, current or previous or both the tax years. Then, additional relief you get when you are ceasing is terminal loss relief. This is not available under any scenario, only when you are ceasing trading. And you can't carry it forward. This is not available. Nothing to carry forward, you are ceasing trading. So, exam advice. Relief against total income of the previous tax year is also still available if your cessation falls within the first 4 tax years of trading. However, this will not be examined. So they will not ask where you just start for 4 years and you're finishing it off and getting relief against total income of the previous tax years. This they will not ask you, don't worry. Now, terminal loss relief. So this relief allows the loss of the last 12 months of trading to be set up against the trading profit of the tax year of your permanent discontinuance and the 3 tax years before that in a LIFO basis. LIFO, this is LIFO. When you started, it's FIFO. When you close, it's LIFO. Last year first and then you go back. For the 3 tax years, you have to keep adjusting until you don't finish the 12 months. Now, so the terminal loss relief compensates the taxpayer for not being allowed to seek relief for the loss under carry forward. See, because you're not carrying it forward, this terminal loss relief is giving you that relief. Because you can't carry it forward, so this relief. If not that, then this. So now, here, against total income. So when you're making the relief against total income or chargeable gain, for any part of your loss, that would also fall into your terminal loss. This part of the loss will be excluded from your terminal loss relief. See, if your total income and chargeable gain when you are claiming, and if it falls, some part of it falls under terminal loss also. Remember, that part of loss is excluded from terminal loss relief. Why? You can't get, for one loss, you can't get twice the relief. Okay, you can't get relief twice. And if relief against total income and gains are claimed, if you are claiming against total income and gain, the terminal loss relief is given last. Always follow this order. So the principal benefit of this relief, terminal loss relief, is that relief is given in earlier years than when relief against total income or chargeable gain. So example 8. Let us understand this with example 8. A trader ceases trading on 5th April 2025, making a loss for last 12 months. That is 6th April to this one. So they can claim terminal loss relief against adjusted trading profit of the same trade in the tax years. That is 24 to 25 in the tax year of the loss, and also 3 tax years on a LIFO basis: 23, 24, 22, 23, and 21, 22. Now, activity 3. So, activity 3, we are making profit except here 40,000 loss in 25. That is the year when he's ceasing trading. A. Calculate trading income. B. Show terminal loss relief. So, let's do that. So, part A. Part A, the trading income is 30, 24, and 10, except the last is 0. So, coming to part B, terminal loss relief. So, the 4 tax years. Okay, I've already done 3. This is from the previous activity. One more I have to add is 24, 25. Now, so trading income. So, trading income is 30,000, 24,000, 10,000, and 0. Then we have the terminal loss relief on a LIFO basis. Okay, so LIFO. So first, what is the loss? Amount of loss is 40,000. So first we'll deduct 10,000. Then we'll deduct 24,000 minus. So 10 and 24, 34. So from 40, if 34 is gone, here we have to deduct the remaining 6,000. Done. Let's do the sum function. So here we already have here 24,000, rest all are 0. So this is the answer. Where these are the profits. So these are your trading income, except this where you made a 40,000 loss. So first 10,000, then 24, then the remaining 6,000. Now, terminal loss that falls into 2 tax years. So last 12 months might sometimes fall into 2 tax years. So in this case, you have to calculate the terminal loss relief with reference to 2 tax years. Example 9 will help you to understand this better. So preparing accounts to 31st December. That means he's ceasing trading on 31st December 24. So last 12 months of 24,000. This is the loss. Profit for 31st December 23 were 10,000. This is how he will calculate. So if you see, okay, what happened here? Can you see this timeline? So from 31st December to 5th April, and from 5th April to 31st December. 3 months here, 9 months here. When you're taking the loss, when you're going backwards, 9 months and 3 months. So this profit is ignored. So when we are taking the loss, what is the loss? Loss is 24,000. So 24,000 you have to take first 9 months and then go back and take another 3 months. So now this 24,000 is allocated like this. 18,000 and 6,000 for this tax year, 18,000 for this tax year. If 1 or 2, so that is your terminal loss, is a profit, the amount is reduced to nil for the purpose of terminal loss. If 1 or 2, that means if either this or this is a profit, the amount is reduced to nil for the purpose of terminal loss. Any profit is ignored for the purpose of calculating terminal loss, as the terminal loss is already for a full 12-month period. Now, terminal loss for the final period which is less than 12 months. You might have the final period of account less than 12 months. So in this case, you have to go to the previous period before 12 months also. Remember, you have to go backwards. So here, final tax year is 6th April to the date of cessation, and before that, 12 months before ceasing to 5th April. So if a trading profit arises for one of the two periods of account, profit will reduce the loss available for relief, but cannot turn the loss into profit. It can reduce the loss, but can't turn the loss into profit. Now, example 10. Here again, they are preparing to 31st December. They are ceasing trading on 31st December. They are ceasing trading on 30th September, making a trading loss of 18,000 for 9 months. That means from Jan to September, 9 months they are making a loss. So, and a trading profit of 9,600 for year ended 31st December 2023. Now, this is the timeline. So here, when you're taking the loss, what is the amount of loss? It's 18,000. And you have prepared, if you see, you have ceased trading on 30th September. So you and is the period. See, the period is for 9 months. Please understand. From April to September, it is a 6-month period. But if you take from Jan to September, it is a 9-month period. So that's why total 6 over 9 into that 18,000 loss. Here also 3 over 9, the balance. So if you go back, you see, when you are making the trading profit 9,000 for the year on 31st December 2023, from January to December, this, when you're making the profit you can take for 12 months. But you have to take from 3 months. See the tax here when the loss arises. Trading loss for 9 months. January to September. So it falls in 23-24. Some part falls in 24-25. So here if you go by, it is 3. Here if you go by, it is 6 months. 1 is 6, 2 is 3. That's what we have taken. So we have taken the loss. And then, but here we have some profit also. For the 9 months. But we can only take for 3 months. Why? For this period. Only 3 months we can take, from Jan to March, Jan to April. Because we have to take this, because they fall in the same period, this loss and then this profit. That's why we are taking 3 months. But this is for 12 and this is for 9. This profit is for 12 months. the 9,600. You see, trading profit of 9,600 for year ended. They have given for the 12 months from January to December, but you are taking for the 3 months because that is the time is making a loss also. So you offset. Basically, you are offsetting the loss with the profit and taking the total loss. So when you add this loss, this is your loss, terminal loss for the last 12 months. Now, if the profit was 30,000, everything remains the same. Now you see what happened. 7,500. So this is 0 because it's a profit now. 2 is profit. So your loss is just 12,000 now. Now, terminal loss must be claimed within 4 years at the end of the tax in which the trade ceases. So for 31st December 2024, when you are ceasing trading, you have to make the terminal loss claim by 5th April 2029. Why? See, this is 5th April, this ends 5th April 2025. So 4 years from that, not 4 years from 2024. You might think why it's 29 and not 20. That's why. From 5th April 2025, you have to take 4 years. That's why 5th April 2029. They told end of the tax year. So now, tax reductions arising from terminal loss relief are affected by set off against or repayment of the tax of the tax. See, how are you going to get the relief? You are deducting the tax, right? This terminal, because of this terminal loss relief, okay, in the tax year of cessation, you are going to get the repayment of the tax liability. Earlier you might have paid tax, but now that tax is reduced, but you paid more. So that excess that you have paid, now when you are ceasing that year, you are going to get a repayment from HMRC. Activity 4. So activity 4 has a very good question to understand this, where you are preparing your account to 31st December. You cease trading 30th June and you have been given the profit and the loss. This is for period ended, year ended, and this is for period ended 30th June 2024. That means 6 months. When are we making losses? C. Loss of the final tax year, 6th April to 30th June. Okay, if you take it May, April, May and June, 3 months, but it has been for 6. Overall it is 6 months, the total for that year, but 3 months from April to June of 38,000 loss, and you get the loss. Then you go back. This is 6 months. Okay. So now, remember it is for 12 months you have to get. Okay. This is for 24-25. Now you are going to 23-24. You are going backwards. Here it is 1st of Jan to 5th April. So 1st of Jan 2024 to 5th April 2024. You didn't incur a profit. This profit was incurred 31st December 23. It does not fall here. So 3 of 6 of 38. Again 19,000. Now, from 1st July to 31st December, 6 months, and it is for year ended 12 months. You have made a profit of 23. This 23 will adjust here now. Okay. So this 11,500. Now, overall loss is this. When you add this to, it is 26,500. Remember, relief is in the first 4 tax years. 21, 22, 23 and 24. Only against the trading profit. not against total income for terminal loss. So now the last part of this lecture, loss relief planning. So what is the objective? Objective is to get the highest marginal tax rate. Get the relief at the highest rate. Second, get relief as soon as possible. Third, minimize any unrelieved losses. And minimize the wastage of personal allowance, savings and dividend related ban, capital annual exempt amount. So these are the 4 objectives. Keep this in mind when you are planning for the loss relief, when you are told to advise on the best option. Moving on to the choice. Okay. Choice will depend on how they are ranked. So it depends on a preference of the particular taxpayer. They will give in the question. Okay. Now, other factors. What is the amount of the loss and the ability to adjust this by restricting capital allowance? Next, effect of 50,000, 25% of loss relief. Amount of your chargeable gain. Amount of income available to be relieved, either in the current year, prior year, in the case of when you are starting the commencement losses. And what is the expectation of our future trading profit? Is it advisable to carry it forward? But when you cease trading, you can't carry it forward. Sometimes an exam question will state in what way the losses should be used. They will state. If a question states that losses should be relieved as early as possible, then first prior year and current year should be made if possible, regardless of whether any personal allowances are wasted or not. You can't see to it that you have to save your personal allowance. Let it get wasted. If they say as early as possible, first prior, then current year. Now, if the question states all beneficial claims should be made, then consider whether the claim is beneficial or not, whether any personal allowances are wasted or not, whether income is taxed at 0% or not. So in this case, it would be more beneficial to carry the loss forward, where your personal allowance will not be wasted. Now, that's it. So now we are still under part B of income tax, income from self-employment. We have touched on the F part, relief for trading losses. We understood how trading loss can be carried forward. We understood how trading loss can be relieved against total income, chargeable gain, and the restrictions. Explain how the relief for trading loss can be relieved as early as possible, and for the earlier years of a trade. That means when you commence trade. Then the terminal loss relief when you are ceasing trading. Then recognize the factors that will influence the choice of a loss relief. So now let us summarize the entire lecture. We have started with the loss, trading loss. So under the accrual basis, a trading loss is an adjusted loss calculated in the same way as adjusted profit we have done in lecture 5. And therefore includes capital allowances. Then under cash basis, your trading loss arise when expenses will be more than your receipts. Expenses as well as your capital allowances on cars. If accounting period is different from the tax year, you have to offset your loss against the profit within the same tax year. You have to bring them in the same tax year, both profit and loss. For a business that you are continuing, okay, whether you have used accrual or cash basis, okay, trading loss you can set off against the total income, either from current or prior tax years. Okay, maximum amount has to be used. So qualifying loan interest in either year, current or the previous, you have to deduct first before you apply the loss against income. Why? Qualifying loan interest you can carry forward, loss you can always carry forward. And this loss relief against total income, again there's a restriction, greater of 50 or 25% of total income. Then carry forward against profit. That means against trading income only, carry forward income you can get relief. When is it? Within 4 years of the tax year of loss. You have to make the claim. Or you can get it against chargeable gain of the same or the previous year. Same way how total income is made. But claim to be set off against total income is made first. You have to make this claim first. Then only you can get it against chargeable gain. And maximum set off is net gains less capital losses brought forward. Now, when you are offsetting a trading loss against total income, it could mean loss of a personal allowance or your nil rate band could get affected. One strategy is to reduce your capital allowance so that you can keep your personal allowance intact. Now, if taxpayers are having a trading loss in the first 4 years of trading, they can use this loss to offset against total income for the 3 consecutive tax years on a FIFO basis. And taxpayers with a trading loss in the last 12 months set off trading, they can set off against trading profit, not total income, up to 3 tax years on a LIFO basis, known as terminal loss relief. Then, if your period is less than, remember, if your last period is less than 12 months, always you have to make the total 12 months, okay? So, result of last period plus the year before that, the period before that. Loss available for relief is, this is the terminal loss, okay? 6th April to date when you're seizing, 12 months before seizing to 5th April. Now, so loss relief option considers this. What would be your rate of tax, the timings, preserving personal allowance and the nil rate band. So, there are no technical articles for this lecture. Thank you for watching and I shall see you in the next lecture. By the way, if you haven't watched my previous lectures, you do go back and watch. I finished the employment income, property income, investment income, self-employment income. So I finished with this. The next will be NIC. So the next lecture will be NIC. With this, I have finished income from self-employment. Self-employment income is over. There are 3 lectures which focuses on this. Lectures 6, 7 and 8.